Moon math in crypto isn't as crazy as it sounds, because here's the part most people miss. Sometimes the predictions that feel insane at first are the ones that end up being right. Nobody believed Bitcoin would hit $1. Then $100 sounded ridiculous. 10,000 felt impossible. Even 100,000 was called a fantasy. And yet, step by step, Bitcoin kept proving people wrong. So when someone says a $1 million Bitcoin is coming, the instinct is to laugh. But if you slow down and look at the mechanics behind it, the idea starts to look less like hype and more like simple economics. Start with supply. Bitcoin has a hard cap of 21 million coins. That number cannot be changed. No government can print more. No company can dilute it. The supply schedule is locked forever. But here's what makes it even tighter. Not all 21 million coins are actually available. A significant portion is believed to be lost. Early wallets, forgotten keys, coins that haven't moved in over a decade. That shrinks the real circulating supply. On top of that, every 4 years, Bitcoin goes through a halving, which cuts the new supply entering the market in half. Over time, fewer and fewer new coins are created. Bitcoin's inflation rate is now lower than most traditional assets. So supply isn't just fixed. It's getting scarcer every year. Now look at demand. For most of Bitcoin's history, buyers were mainly retail investors and tech enthusiasts. Today, a completely different class of money is entering the space. Institutions, corporations, asset managers, and even governments. Bitcoin ETFs open the door for traditional finance. Large funds can now gain exposure to Bitcoin without dealing with wallets or private keys. That makes it easy for pensions, hedge funds, and wealth managers to allocate even a small percentage of their portfolios. Public companies have started adding Bitcoin to their balance sheets as a long-term reserve asset. For them, it's not a quick trade. It's a hedge against inflation and currency risk. Here's the key point. These players control billions and trillions of dollars. Even a 1 or 2% allocation represents massive capital compared to Bitcoin's limited supply. When large pools of money try to enter a scarce asset, prices don't drift upward slowly. They jump. Then there's the sovereign angle. Some countries are already holding or mining Bitcoin. Others are studying it as a strategic reserve. If even a small fraction of global sovereign wealth shifts toward Bitcoin over the next decade, the demand shock could be enormous. This is capital rotation. Bitcoin doesn't need to replace the entire financial system. It just needs to capture a small slice of global wealth. Now consider the narrative shift. Bitcoin is increasingly seen as digital gold. Gold has been a store of value for thousands of years, but it's heavy, hard to move, and its supply grows through mining. Bitcoin is portable, divisible, and its supply is perfectly predictable. Throughout history, digital systems have replaced physical ones. Streaming replaced DVDs. Online banking replaced paper statements. Many investors believe Bitcoin is the digital upgrade to gold. If Bitcoin captures even part of gold's role as a store of value, its market size could expand dramatically. Looking at market cycles, Bitcoin has historically moved in waves tied to its halving schedule. Each cycle has brought a higher price floor and wider adoption. As the asset matures and institutions provide deeper liquidity, future downturns may be less extreme. That means future bull runs don't need the same explosive percentage gains of the early days to create huge price moves. A rise from 100,000 to 1 million is a tenfold increase, big but not unprecedented in Bitcoin's history. And then there's the simple math. At $1 million per coin, Bitcoin's total market value would be around $21 trillion. That sounds huge until you compare it with other global asset classes. Gold is in a similar range. Global real estate, bonds, and equities are far larger. Bitcoin wouldn't need to take over the world. It would just need a small percentage of global capital to flow into it. In a world facing inflation, rising debt, and declining trust in traditional systems, a scarce, borderless digital asset becomes increasingly attractive. Nothing in markets is guaranteed. But when you combine fixed supply, growing institutional demand, the shift toward digital stores of value, and the scale of global wealth, the path to $1 million Bitcoin stops sounding impossible. It starts sounding like a long-term outcome of simple supply and demand. And if Bitcoin has taught the world anything, it's this. The levels people call crazy today often become the milestones of tomorrow. This is not a financial advice. It is just for educational purpose. Like, share, and subscribe us for timely updates. See you soon.